friends, welcome to Wealtech Speaks YouTube channel, and this is Amritesh. Before we start, if this is your first time here, request you to subscribe to my YouTube channel and blog to get notified as soon as a new video or blog is published. In this video, we will discuss the income tax slabs and rates applicable for the current financial year 2020-21. In the budget 2020, new tax regime was proposed along with new tax slabs and rates. However, the existing tax regime or the tax system from the previous financial year has also been retained. Thereby, taxpayers have the option to choose between the two tax regimes. So an individual, based on preference and tax implication, may choose any one of the tax regime to pay the tax. New tax regime introduces new tax slabs and reduced rate of taxation for the benefit of the taxpayers. However, taxpayer opting for the new tax regime will have to forego most of the tax deductions and exemptions available under the existing or the old tax regime, as we call it. Individuals opting for the existing tax regime will be eligible to claim the tax deductions and exemptions which were allowed previously. The following income tax slabs and rates for the financial year 2020-21 is applicable under the new tax regime. Under the new tax regime, tax rebate of 12,500 is available under Section 87A for individuals with taxable income up to 5 lakh rupees, thereby implying income tax assessee with income up to 5 lakh rupees will not be required to pay any tax on their income. Now coming to standard deduction, which is available under the old tax system, is unfortunately not available under the new tax system. However, when we look at the income tax slabs and rates, you will find that there has been a significant changes in the slabs as well as the income tax rates. So as per the old tax system, any income of 10 lakh rupees used to attract income tax of 30%. However, in this new tax system, you will find that income between 10 lakhs to 12.5 lakhs is being taxed at 20%. Similarly, if you look at 7.5 lakhs to 10 lakhs, it is being levied at 15% compared to 20% in the previous tax system. While for income between 5 lakhs to 7.5 lakhs is being taxed at 10% under the new tax system, which again was levied at 20% under the old tax system. For income up to 2.5 lakhs and up to income up to 5 lakhs, things remain pretty same between the old and the new. Now we move on to another aspect of the new tax system where deductions and exemptions are not available. So let's look at that. Income tax deductions and exemptions not available under the new tax system. So under the new tax regime, standard deduction of 50,000 is not available. Exemption on leave travel allowances and house rent allowance is also not available. Deductions under 80C, 80D and so on is also not available under the new tax system. Even deductions on interest paid on home loans and exemption on interest on deposits in savings account, that is also not available. So under 24B, the interest paid benefit which individual used to get under the old tax system of 2 lakh rupees, that is not available. Again, investments under Chapter 6A, which includes investment in EPF, PPF, health insurance premiums, those are also not available under the new tax system. Again, when we talk about interest on deposits and savings account under TTA, exemption of 10,000 was available, which again is not available under the new tax system. Now let's take a quick reference to the old tax system and the rates which are applicable. Under the existing or the old income tax slabs and rate for financial year 2020-21, as you can see, the tax structure remains the same For income up to 5 lakh rupees, you don't require to pay any income tax because you get a tax rebate of 12,500 under section 87A. Another significant thing is under standard deduction of 50,000 is available under the existing tax regime, so that's a benefit for individuals opting to pay income tax under the existing or the old tax system. Apart from that, as I have discussed earlier, also the tax rate in the existing tax system remains just the same as the previous year. For income up to 5 lakhs, you require to pay 5% income tax, but again you get the rebate, so you don't need to pay anything. However, if your income is above 5 lakhs, then you lose out on the rebate of 12,500 rupees, and then the entire amount which you have will be taxable. Like say if you have an income up to 7.5 lakhs, so for 5 lakhs to 7.5 lakhs the income, you will be levied 20% tax, and for 2.5 lakhs to 5 lakhs you will be levied tax at the rate of 5%. So it comes to 12,500 for income up to 5 lakhs, and for income between 5 lakhs to 7.5 lakhs will be 50,000. So it will be 50,000 plus 12,500, 62,500 plus 4% cess. So this was the example which I gave you. So this way the tax will be calculated on the existing tax system. Now let's look at the benefits which are available under the existing tax system. Now we come to the income tax deductions and exemptions available under the existing or the old tax regime. So as I have said earlier, standard deduction of 50,000 is available under the existing tax system. Deductions under 80C, if you are making investment in EPF, PPF, NSC, equity linked mutual funds, so benefit up to 1.5 lakhs can be claimed on the same. 80D on health insurance premium for an individual below 60 is 25,000, and if you are paying it for your parents who are above the age of 60, another 50,000 benefit you can claim. Deduction under section 80 CCD 1B, which is investment in national pension scheme, you get additional benefit up to 50,000 rupees. Again, interest on home loan paid or the principal amount paid for the home loan towards the home loans is again eligible for deduction. So in totality, if we calculate the tax deductions and exemption benefits which we get under the existing tax system amounts to 4.75 lakhs if we are availing all the benefits which are available. Now let's move on to another slide and find out the benefits under the new tax slabs as well as the existing tax regime. So what are the benefits which we get under the new tax slabs and rates? If an individual is opting for the new tax regime, the computation of tax liability becomes very easy because you don't have any deductions or exemptions available under the new tax system. So computation becomes very easy. You have the tax slabs and rates, and you can calculate likewise the tax liability which you need to pay at the end of the year. So it is very simple. You have the rates, you have the slab, and you can easily calculate. Another advantage is reduced rate of taxation. In case an individual is not availing the tax deductions and benefits which are available under the existing tax system, so for them the tax rate of tax is reduced, so tax liability automatically reduces, which is a benefit. So for those individuals, it is always recommended that they avail the new tax system. Another thing is no need for specific investments to save tax. So say for example, I am investing in PPF just to save tax. Now if I am not interested in making investment in a debt fund or in PPF, I will look at some other options, and I am not really bothered about the tax saving which I will get by investing in that kind of product. So here I am free to take my decision and invest wherein I feel I will get maximum return. So for individuals who are looking for better returns or want to invest in some other products, maybe equities or something else, they can look at the new tax system to pay their tax. Now let's move to the existing tax slabs and rate and the benefits which they offer. Let's understand the benefits under the existing or the old tax regime. First, standard deduction of 50,000 is available under the existing tax system. Apart from that, tax deductions, which I had discussed earlier also in this video, is also available under the existing tax system. So this benefits like benefits under 80C, 80D, 80C CD1B is available in the existing tax system. Apart from that, interest paid on home loans, that is also available for deduction. Last point which I would like to highlight is that under the existing tax system or the old tax regime, individual has to make investments in order to claim tax deductions. So this is a positive aspect which encourages an individual to think about savings, and this saving translates into investment. So this is a very good aspect of the old tax regime. Now with this I come to the end of this video. I will share a comparison video where I will compare the old and the new tax regime very soon, and this will also help you to understand the tax computation under both the regimes. So with that, I will close this video. Do subscribe to my YouTube channel as well as my blog. You guys have a great day and I will see you very soon. Thank you.